Michael Saylor's new plan to raise $84 billion to buy Bitcoin could trigger one of the biggest wealth transfers in crypto history. Because when this kind of capital floods into an asset with limited supply, the result isn't just price movement, it's a full-blown supply shock. And here is the kicker. Supply on exchanges is already drying up. Spot ETFs are hovering up Bitcoin like never before. And retail hasn't even woken up yet. And this is the kind of setup Bitcoiners could only dream of just a few years ago. But it's happening right now. And Saylor isn't the only one preparing for what's coming. In this video, I'll break down exactly how he plans to pull this off, why this is the most bullish setup we've ever seen, and how I'm positioning myself before the rest of the world catches on. So stick around, because what's coming next might be your biggest opportunity in this entire cycle. Alright, let's dive in, guys. Michael Saylor just announced a plan to raise $84 billion to buy more Bitcoin. Here in his tweet by 𝗗𝗶𝘀𝗰𝗹, bullish news, Michael Saylor is going to raise the largest amount of capital that he has ever raised. Much bigger than Facebook or Alibaba's IPOs. And that says quite a lot, because Facebook or Meta nowadays and Alibaba are very big companies. They raise a lot of money, but Saylor is going to raise even more. Now, MicroStrategy was never just a tech company. Because since 2020, they've been dollar cost averaging billions into Bitcoin, no matter what the price is. I know many of you watching this video, or many Bitcoiners or crypto investors, many of you say like, hey, yeah, I'm dollar cost averaging into the market, but when the market actually starts to go up, like many of my friends, you know, when Bitcoin starts to exceed $100,000, then they think, all right, no, Bitcoin is too expensive right now. I'm going to stop dollar cost averaging into the market. But MicroStrategy actually bought Bitcoin no matter if Bitcoin was high or low. So here you see this chart that shows all of the previous acquisitions of MicroStrategy. So all of the yellow dots are Strategy's Bitcoin purchases. And you see that regardless if the price was high or low, they kept on buying more and more Bitcoin. So in fact, they were DCAing into the market like you should. And as a result, they actually accumulated a lot of Bitcoin. They are now holding around 553,000 Bitcoin. They're one of the biggest holders of Bitcoin. I believe they're the second biggest Bitcoin holder out there behind BlackRock. And Michael Saylor's even tweeting that Bitcoin is hope for Berkshire Hathaway. Because maybe you've heard the news, but actually Warren Buffett, the greatest of all times, the GOAT, Warren Buffett has a net worth of $150 billion. He grew that net worth by running and managing Berkshire Hathaway, one of the most successful investment companies. And they've done very successfully. But Michael Saylor is saying that if Berkshire Hathaway wants to keep going on that next trajectory of growth, they should probably consider Bitcoin. And why is Michael Saylor targeting specifically? Why is Michael Saylor specifically targeting Berkshire Hathaway? Well, it has to do with a few different things. Berkshire Hathaway is sitting on a record pile of cash, roughly more than $300 billion worth of cash, literally sitting along the sidelines, waiting to be deployed in the market. And they're always looking for great asymmetrical investment opportunities. But the investment philosophy of Berkshire Hathaway was to not invest in tech companies, because that was not their expertise. They wanted to invest in boring, stable companies that they could really understand and that are basically simple and predictable, like Coca-Cola, like Geico, an insurance company. But tech, according to Warren Buffett, is too unpredictable, because one day you might have a really disruptive company, and then 10 years later, because of the rate of change of technology, that company might not be relevant anymore. And then suddenly your investment starts to decline. Instead, by investing in boring companies like Coca-Cola, which are more predictable, Warren Buffett was able to grow the value of Berkshire Hathaway at a much more stable but predictable way. But now there's a new successor to Warren Buffett. And since there's new leadership in Berkshire Hathaway, maybe they would be willing to consider investing in Bitcoin and deploying some of their $300 billion plus of cash into Bitcoin. Who knows? But this is what Michael Saylor is pointing at. Now, yeah, this is what we just discussed. So MicroStrategy right now is the largest publicly traded Bitcoin, basically largest publicly traded company that is holding Bitcoin. So here you see MicroStrategy holds around 553,000 Bitcoin, and the second biggest holder of Bitcoin is Marathon Holdings, which owns around 47.6 thousand Bitcoin. Then we have 21 Capital, which recently got launched by Jack Mallers, sort of the founder of Strike, a large Bitcoin app, which is backed by Tether and SoftBank. So it's, I believe, one of the biggest and strongest Bitcoin cartels in the crypto space. I recently made a video about them as well. And their goal is to just accumulate as much Bitcoin as possible in the shortest possible time, while Bitcoin now is still cheap. So we're seeing sort of an arms race playing out between all of these big players in the market that just want to acquire as much Bitcoin. But MicroStrategy is leading the way. So this chart that you're seeing over here, or this table, are all of the publicly traded corporations. Of course, BlackRock also owns Bitcoin, but they own Bitcoin through their ETFs. So in fact, they don't own the Bitcoin, but they're holding custody of the Bitcoin on behalf of their investors. But as a result, they control the underlying asset. So they own around $600,000 worth of Bitcoin. So Michael Saylor recently turned MicroStrategy into a full-blown Bitcoin acquisition vehicle. Prior to 2020, MicroStrategy was mainly a software company. They were focused on business intelligence, so helping companies to make sense of their data within their company and turning that into powerful strategies to grow their profit and their revenue. But this year, February, MicroStrategy actually rebranded to Strategy in order to signal to the rest of the market that their sole purpose is to accumulate as much Bitcoin as possible, because they did an analysis and they found out that Bitcoin right now is the biggest asymmetrical play. And with asymmetrical play, we mean the lowest downside potential and the highest upside potential. And since MicroStrategy came to that realization, they wanted to just accumulate as much Bitcoin as possible. And they have been using their cash flow from their business intelligence business unit, so their software business unit, to buy up as much Bitcoin as possible. But now they're slowly abandoning that old business model and starting to focus on just accumulating as much Bitcoin as possible. So yeah, this year, 2025, MicroStrategy rebranded to Strategy. Big signal to the investor community. So here is how he's doing it. So Strategy is actually a portfolio of 3 different financial instruments. So on the one hand, you have MicroStrategy, which is the underlying stock of Strategy. But they also have Strike, which is a convertible debt instrument. And they have Strive, which is a fixed income instrument. And each of these financial instruments plays into a different segment of investors. And the most recent addition to this portfolio of financial instruments is Strive. So Strive is basically a financial instrument through which Strategy wants to tap into the $300 trillion bond market. So here you see, there's right now around $900 trillion of wealth stored in different assets. So gold, art, cars and collectibles, equities, real estate, bonds, cash. So many people are fixated on equities and real estate, but there is a lot of money tied up in the bond market. Now, the bond market can be also distinguished into different types of investors. So you have convertible notes, which is a particular type of bondholder. So convertible notes basically means that when a certain event happens in the market, people that are holding this debt or this bond basically can trigger a conversion instrument, which will conversion event, which will help them to convert their bonds into MicroStrategy stock or strategy stock. And then we have Strive, which targets the broader bond market. So what is actually the bond market? Well, very simple. Whenever a company wants to raise money through bonds, it basically borrows money from the public. So when a bond is issued, an investor basically gives money to the company, and there's a promise that a certain amount of interest will be paid over that principal, so the initial amount that has been lent, and that by a certain date that money will be paid back to the investor. And this is why it's called fixed income, because it pays an interest, it pays a dividend. Not a dividend, it pays an interest. So that interest is fixed income. So that's cash flow coming in every single period. Now, Strive is a very specific type of financial instrument. So when MicroStrategy came out, they launched a Series A offering, meaning a very small initial offering, and they wanted to raise $500 million of money through this initial Series A. In fact, they raised it to, I believe, $750 million, and that money is going to be used. Here it says, Strategy intends to use the net proceeds from the offerings for general corporate purposes, including the acquisition of Bitcoin and for working capital. But most likely it will be used for the acquisition of Bitcoin, because that's the whole playbook that MicroStrategy is basically implementing right now. They just want to accumulate as much Bitcoin as possible. So there will be a fixed rate of 10% per annum, so 10% interest per year, meaning that a $10 dividend will be paid out for a $100 principal. So every bond is $100 that you're lending to MicroStrategy, meaning that with a 10% fixed rate, you're receiving a $10 dividend per year. Market price could mean more or less 10% effective annual interest rate. Right. Now, there's also something else. It says here that MicroStrategy doesn't actually have to pay this dividend to these Strive holders. It can decide to not pay out those dividends because it doesn't want to pay out that money right now. It instead wants to use that money to pay more Bitcoin. But unpaid dividends will accrue, so it will compound with an additional interest rate between 11 to 18% per year. So they may decide not to pay out that money, but then it will compound even faster. And Strategy can retire this financial instrument at any time by paying the liquidation price of those bonds, basically. So the liquidation preference is $100 or more, depending on the recent market price of shares. So, right. What this is saying, MicroStrategy is going out there on the bond market. They have this new financial instrument. They're going to raise $500 million. Right now, it's already $750 million, maybe even more. But they raised it because there was a lot more interest in the market, because the bond market is so massive. What we mentioned before, around $300 trillion worth of wealth is in the bond market. So 750 million is just a tiny fraction of that market. And it's an interesting instrument. People can earn a nice dividend, and if they don't pay out the dividend, it will compound over time. So what's the strategy here? Basically, this diagram shows it the best. Bitcoin is increasing in value over time, whereas the dollar decreases in value over time. So you have these two converging lines, increasing value and decreasing value. So Strategy wants to take advantage of the discrepancy between the two. So it wants to borrow dollars right now, and then over time, by investing that in Bitcoin, you will grow the capital or the value that is associated with that Bitcoin, and then it will try to sell a small portion of that Bitcoin in order to pay off the dollars that it borrowed in the past. And that is basically, if this game plan plays out, they have basically created money out of thin air. they took advantage of a very interesting discrepancy between the increasing value of Bitcoin and the decreasing value of the dollar. So I do believe this is financial alchemy. Alchemy is like the art of turning whatever into gold. There have been many people throughout history that wanted to obtain the mastery of alchemy, but this is financial alchemy. This is literally creating value out of thin air. Of course, this is based on the assumption that Bitcoin moves in 4-year cycles and that every 4 years, Bitcoin will be at a much higher value than it is today. But so far, the 4-year cycle theory, although there's some critics out there that believe it's not valid anymore, there's still a lot of evidence that the 4-year pattern is intact. By the way, if you believe that this video is valuable and you want to see more videos like this one, make sure to like this video and subscribe to my channel, because I'm going to be posting regular videos like this one to help you to make sense of everything that's going on in the market and all of the moves that these big players like MicroStrategy are making behind the scenes. So yeah, let's continue dissecting this Strive offering in just a bit more detail. So Strive is just structured like an ordinary bond. We basically dissected the whole offering over here, so I don't think we need to go over it again. But now Michael Saylor wants to use those 3 instruments that it has. So let's go back to these again. MicroStrategy wants to use MicroStrategy stock. So recently they did a shareholder voting and announced that they are going to issue more MicroStrategy stock that they can sell to the public, meaning that the current holders of MicroStrategy will be slightly diluted. On the other hand, they might all benefit from the company gaining more capital so they can buy more Bitcoin and can gain more dominance over the market. They can also issue more convertible debt, and they have this Strive fixed income instrument. And through those 3 different financial instruments, they want to raise $84 billion. So their initial plan, which they announced last year, was their 21-21 plan. So they wanted to raise $21 billion of money by selling equity on the public markets, and they wanted to raise another $21 billion raising debt or through debt. And now they doubled this target, not from $42 billion, which was initially the game plan, but to $84 billion, which is an insane amount of money. And with ETFs and sovereign wealth players, just getting started, so sovereign wealth funds, he is front-running the biggest Bitcoin supply squeeze we've ever seen. Here, Michael Saylor's company strategy is going to raise another $84 billion. You've read it correctly. So 50% of that is going to be raised through equity, and 50% of that is going to be raised through debt. And here you see a breakdown. So equity issued $20 billion, which is already being done, and they can raise another chunk of money, so another $21 billion through equity. So what I mentioned before, recently they announced that they're going to expand the supply of MicroStrategy stock that they can issue to the public, so they can raise another $21 billion there. And here you see that through debt, they still need to raise a lot of money. So they already raised around, $5 billion through convertible debt, and around 700 million through Strike and 700 million through Strive. And they want to keep on issuing more fixed income instruments or expand the current fixed income instruments in order to raise this $42 billion of money on the debt market. So they have been doing really well. They have been very creative. They're creating money out of thin air. They're raising money left and right. I do believe Michael Saylor is probably going to raise his target again in the future, but I understand why they are doubling this target or adding to this target every single time, because if you say a massive target right now, like we're going to raise $1 trillion or a few $100 billion, then it might seem like a Mount Everest. It might seem like an too big to achieve goal. And by hitting these targets and showing to the investor community that MicroStrategy has the ability to actually raise these amounts of money, then over time it builds trust and it builds a track record, allowing them to raise even more money on the open market. So I do believe that with players like MicroStrategy and all of the big dogs that are now acquiring Bitcoin, retail investors, meaning the average investor like you and me, will soon be priced out of the market, because we cannot just raise a few $1 billion, or we don't have a few $1 billion sitting in our bank account. We don't have that much dry powder like these big dogs have right now. So the longer you wait, the more likely the probability will be that these big guys are going to drive up the price of Bitcoin. I believe that in just a couple of years from now, Bitcoin will be an asset for the elite, because only the elite, the billionaires, the sovereign wealth funds, the ETFs, the BlackRocks, the Fidelities of this world will be able to buy Bitcoin. Now, if you ask me, Bitcoin is still dirt cheap. But in a few years from now, you've probably heard the price targets. Many believe within the crypto community that by 2030, Bitcoin will be at a $1 million price, roughly. And in the next 21 years, according to Michael Saylor, one Bitcoin will be worth $13 million per Bitcoin. So that means that one Bitcoin could literally be generational wealth. So yeah, this isn't just a bet. It's a play to corner the market. So a Bitcoin supply squeeze is happening right now. $3.3 billion of ETF inflows this week versus only 2,250 Bitcoin that's being mined. So ETFs are buying 10 times more than what is being produced. And exchange supply is at its lowest since 2018. So it's gonna get very interesting. There are literally billions of dollars that are hitting the market right now. And you might wonder, why is the price of Bitcoin not moving if these billions of dollars are hitting the market? Well, that's because the big guys, the big institutions are not buying on the open market. They're buying behind closed doors. They're buying through what we call OTC desks. OTC desks are literally peer-to-peer transactions. So basically BlackRock goes to Coinbase and they pay an invoice for a few $1 billion, and then Coinbase wires the Bitcoin directly to their wallet. So they're buying it without buying it on the open market, because if they would just drop a few $1 billion on the open market, it would increase their acquisition cost too much, because they're pumping the price in the whole process. So BlackRock is warning of a Bitcoin supply shock. There's not enough Bitcoin for every millionaire. Yeah, that's totally true. There's around 61 million millionaires in the world, and there's only 21 million Bitcoin. So even if every millionaire would want to have one Bitcoin, it's simply not possible. There's not enough to go around. And the billionaires, they will probably want to have more than one Bitcoin. They probably want to have a few thousand Bitcoin. So imagine if all millionaires and billionaires want to get their hands on some Bitcoin. Well, there isn't enough. So there will be some kind of bidding war that's going to drive up the price of Bitcoin. And that's the beauty of Bitcoin. It's limited supply of 21 million Bitcoin that will ever be in circulation. So here you see the Bitcoin adoption of Bitcoin ETFs, which has risen significantly. So here's the number of institutional holders that are holding Bitcoin. So in 2024, it was only, so in Q1 2024, it was only 61 institutions holding Bitcoin. 1 quarter later, it was almost 1,576 institutions holding Bitcoin. 1 quarter later, it was almost 2,000 institutions. Yet another quarter later, 2,500 institutions holding Bitcoin. And another quarter later, we see that almost 3,323 institutions are holding Bitcoin. Basically, what this is showing is that the institutions are FOMOing into the market. They want to get a slice of Bitcoin because they understand the future potential of where this asset is heading. All right. Thanks for watching this video. Do me one quick favor. If you enjoyed watching this video, smash the like button, subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on in the market and to make sure that you position yourself for maximum profits. I'm going to be here with you in the trenches, helping you to navigate through this rapidly changing environment and to navigate you towards the finish line. Because very few people have a game plan in place and truly understand what is happening. They get distracted by all of the noise, by all of the distraction. So I want to give you the pure signal, the pure alpha, so that you know what moves to make. All right, that being said, thanks for watching. Peace out, take care, and I'll see you in the next one.